The U.S. added more than 311,000 jobs, exceeding economists' expectations. President Joe Biden is hailing the latest jobs report as a sign that his economic agenda is working. But it comes as the Federal Reserve is considering hiking up its interest rate hikes again in the coming weeks as part of its ongoing efforts to tame inflation. ABC's M. Wen has more.
President Biden praising Americans for getting back into the workforce, touting that the U.S. economy added 311,000 jobs in February, which he says signals a healthy and resilient job market.
We've created more jobs in 2 years than any administration has created in the first 4 years.
Compared to January, job creation decelerated but was still stronger than expected despite the Federal Reserve's efforts to cool the economy and bring down inflation.
Jobs are available. People are working again. They're becoming more optimistic about their future.
While the Labor Department's report showed the unemployment rate rose to 3.6% from a 53-year low of 3.4%, the average wage growth also slowed, rising 0.2%, the smallest monthly increase in a year. Now, all eyes on Fed Chair Jerome Powell, who told Congress this week his agency will likely hike interest rates again if signs continue to point to a strong job market amid persistently high inflation.
Powell was hawkish early this week. Our view is that the Fed is going to continue raising rates.
The Fed's next decision could depend largely on next week's Consumer Price Index report.
Workers are getting hammered right now by inflation, and especially things like rent. There's groceries and there's gas.
In the past 2 years, my rent has gone up almost $400, so that's a lot.
And despite the U.S. economy continuing to outperform expectations, some economists are still expecting a recession, saying there's no way the Fed can raise rates this quickly without one. M. Wen, ABC News, Washington.